Should you invest in a tax-free or taxable mutual fund? Maybe. Just like every investment question, right? But the real answer, or the real question that you might want to be asking, is what's your goal that you're trying to achieve, right? So when you're going out there in the investment universe and you're looking at mutual funds, stocks, bonds, ETFs, a question that we might have a conversation about if you were a client is, why are you trying to explore a mutual fund? Because many times mutual funds can have additional fees associated with them that might not be needed, all right? So when we look at a tax-free mutual fund, many times that's referred to as like a muni, municipal bond, or a government type entity that's going to give you that tax-free type status. But you're typically trading off a section of that from a performance standpoint or from a yield standpoint, unless you're in a really nice, or a really bad marginal tax rate, something to where you've earned a lot of income and that's kind of doing an offset. There's also the alternative minimum tax that can be a benefit in that situation if you qualify for that kind of a situation. From an income standpoint. The alternative that we would probably suggest is looking at an ETF. ETFs can have a better entry point for them, a better cost perspective for you, because a mutual fund, some of the disadvantages that you're going to find from a mutual fund is they don't trade until the end of the day. So you might go in there, you're excited about how the market's looking, it's been a month, 2, 3, 2 years, whatever you've held this, this mutual fund, and you say, I'm ready to exit this thing. Well, kind of given the current volatility that we've had in the market, maybe you're thinking that thing's going to be up today, and by the end of the day, it really actually closed down. To where on an ETF, you have the liquidity position to where you can get in and out of those, much more quicker than you can on a mutual fund that closes at the end of the day. Also, from a cost perspective, ETFs typically have a much more cost-efficient manner than a mutual fund does. Well, that's not always the case, like anything in the investment world, but that's why you work with a professional that can dig into the details of that and say, what is that goal that you're trying to achieve with this tax-free status? Or why are you trying to look at something that is taxable? Can we work that into an IRA, into a 401k that you have with your employer? So it really depends on the different structures that it's also placed into from an account perspective. Those would be some of the areas that we would want you to suggest to dig into.